In this video, I'm going to explain what is and what is not an investment bank, why they exist, who uses them, and more importantly, how do they make so much money? If you're new to this channel, then let me give you a quick background about me. After graduating from Durham University, I went straight into investment banking as a mergers and acquisitions analyst in central London. And after a while, after interviewing a couple of candidates, I realized that a lot of people don't quite understand what an investment bank is right now. And I completely understand, because investment bank as an industry is a really old industry. It's one of the oldest industries which has ever existed. And the reason why it's been able to survive for so long is because it was able to adapt and change its business model over time. But the problem is, the name hasn't changed. Although the business has changed to keep up with the time, but because the name hasn't changed, people have the exact same assumption of what an investment bank was in the year 1600. So a lot of people assume that at an investment bank, you'll only find investment bankers, when that's completely not the case. Investment banking as a division is a very small part of what an investment bank is as of today. So in this video, I'm going to clarify in simple terms what is and what is not an investment bank right now. So let me start with the basics. Investment banks is an institution which advises and helps its client execute financial transactions. And investment banks have three main types of clients: companies, governments, and individuals. Now, there are some large investment banks, for example, Goldman Sachs and Morgan Stanley, and they do far more than just advising and executing financial transactions on behalf of its clients. They also have divisions where they buy and sell securities, stocks, shares, bonds, derivatives. There are divisions which are dedicated for just research. There are divisions which are dedicated for just wealth management. So I'm going to go over the main divisions which you can find at an investment bank, what they do and who works there. There are 6 main divisions at a typical investment bank. Let's take a look at our first division. Let's take a look at investment banking. Now, it's normally abbreviated as IBD, investment banking division, at most investment banks. And on this particular floor, it's separated into 2 main areas. The first area is mergers and acquisitions, which is where I work. And what we do in this department is advise and execute transactions on behalf of our clients. So if our client wants to buy another business, we would then liaise with the other business to get the deal done. If our client wants to sell a part of his business, or if it wants to sell the whole business itself, we would then handle that transaction. Now, that's one area of investment banking. The second area of investment banking is capital markets. In this area, we help our clients raise capital. And we do this in 2 ways. Either by the public market, so we issue shares and sell them to the public market, or we issue bonds and sell that to investors. And that's how we raise capital for our client. And they will then use this capital for growth, expansion, paying down debt for 101 different reasons. The investment banking department also works with other sub-departments, for example, leverage finance. But I'm going to make a separate video dedicated for just the investment banking division. And in that video, I'm going to explain the A to Z of this specific division. But here, I'm just going to give you an overview of the whole investment bank. And if you are interested in becoming an investment banking analyst, associate, then take a look at our investment banking financial modeling course, where we go step by step through what an investment banking analyst is expected to do in their first year. From financial modeling, financial valuation, creating pitch books. We take you through this via our virtual work experience in a step-by-step process. Okay, so now let's take a look at another division which you can find at an investment bank. Let's take a look at one of the largest divisions, which is the sales and trading division. Now, as the name suggests, within this division, we buy and sell securities on behalf of our clients. And our clients can be hedge funds, pension funds, endowment funds, companies, even individual traders. The sales and trading department earns money in 2 ways. The first way is by charging commission for every transaction we execute. The other way the sales and trading department earns money is by making profit from trading. This department at an investment bank is very important for the whole market as a whole. Investment banks act as market makers. So they are forced to make market for all of these shares that you find listed on the exchange. So for example, if you wanted to buy Apple shares, but no one was selling their shares, investment banks are forced to sell shares to you because they act as market makers, and by law they have to make a market for shares and for other assets which are traded on the exchange. So investment banks play a very important role in the liquidity and in the marketplace. Now within this specific area there are different roles. You have sales roles. Now these people will call their clients either hedge funds, pension funds, endowment funds, and try to sell them on trading ideas. You then have the trading team. The trading team, their role is to develop trades and communicate that to the sales team to get those trades sold. You then have another team within the S&T group. Now this in itself is a separate division, and this division ranges in size from bank to bank. But if you look at Goldman Sachs, this is a pretty large division, and that's the prop desk. Proprietary trading as a division accounts for a large part of some of the bank's revenue. And in proprietary trading, the bank is using its own capital to trade. So in this area, they're not executing trades on behalf of clients, they are in itself trading for the bank. They're trying to make the bank money by trading the bank's own capital. But before we talk about the prop desk, let's just rewind a bit. The S&T group, over the past 20 years, with the introduction of algorithmic trading, programmatic trading, commission has been squashed a lot. So you can no longer charge the same level of commission which you would have 20 years ago, 50 years ago. And that's because programmatic trading has made the whole process more efficient, more quicker, so you won't charge that much. But as a way to compensate for that lost revenue, investment banks have come up with a way to develop really highly complex financial instruments. So for example, mortgage-backed securities, MBS, credit default swaps, CDS, credit default obligations, CDOs, all of these highly complex financial instruments, which was part of the 2008 financial crisis, they are developed by investment banks. And to make these financial trading products, investment banks will hire PhDs in physics, PhDs in mathematics, engineers, economists, finance rock stars. And this is why a lot of highly qualitative and quantitative individuals will go into investment banking for the sole purpose of creating these highly complex, non-standard trading products. Okay, so now let's move on to another division which you can find at an investment bank, and that is prop trading. Now, as we've already discussed, prop trading is a process of a bank trading on behalf of its own balance sheet. So the bank will use its own money in order to trade to try to make a profit. Now, this area at an investment bank is highly regulated, and for good reasons. If you can imagine, if Goldman Sachs received an order from one of its clients to buy 10 million Apple shares, so effectively they know that this is going to move the market slightly. So Goldman Sachs have an information advantage where they could buy the shares and then put in their client's order, which is going to move the market, and once it's gone up, they could then sell the shares for a profit. So in order to prevent front running and other type of devious activity, regulators have intervened in order to put in a Chinese wall so that it's blocked out from the information flow which the rest of the investment banks receive. Now, whether or not that's always being followed, you can be the judge of that, but either way, it is a highly regulated area. Another large department at an investment bank is the research department. And this area is further subcategorized within different areas. You have the fixed income research group, you have equity research, commodity research, economic research, but out of all of the research group, the largest one is the equity research team. Equity research analysts, their role is to forecast the future performance and earnings of a specific set of companies which they're following. Say for example, an equity research analyst is currently following Tesla, and that equity research analyst will then have to place a rating on the share. So whether it's a good time to buy the share right now, or if it's a good time to sell the share right now, or if it's neither a good time to buy or sell, we should just hold. Now, along with a rating, research analysts will also place a price target. Now, a price target is based on their analysis where they think the future performance of that share price is going to be a year from now, 2 years from now. So once an equity research analyst have produced these detailed reports, they pretty much have two sets of clients. The first set of clients are going to be internal clients. Now, these are people that works in different areas at the investment bank. Say, for example, someone that works in S&T, sales and trading, and someone that works within the sales part. They will then take this research report, go to their client, which could be a hedge fund or pension fund, and say, hey, our research department just figured out that Tesla is due for an upside because XYZ catalyst. Do you want to buy shares in this now? Now, that's an example of an internal client. An external client would be directly to sell these reports to hedge funds, pension funds, endowments, and individuals. What's interesting about research analysts is how specific they get to be. Now, as someone that worked in mergers and acquisition, my industry coverage was TMT. So I would be involved in deals that revolve around technology, media, and telecom companies. But if you're a research analyst within the research department, not only are you just focusing within one area, say technology, but you're going to only follow only a certain amount of companies within technology. Usually it's around 20 to 12 companies. So you can imagine just how detailed their research reports are going to be. Research analysts pretty much live and die by how accurate they can forecast the future performance of a company and how well they can build these financial models. Now, as someone that worked in mergers and acquisition, I would pretty much be doing the exact same thing in terms of modeling the future performance of some of my companies. But if I'm wrong, I could pretty much just blame the market. I could blame X, Y, Z reason. But an equity research analyst can't do that. They have to be accurate all the time. And their bonuses is pretty much dependent on that. Because the more accurate they are, the more in demand their reports are going to be. So therefore, the more sales they're going to be able to generate. Equity research analyst is interesting for a couple of reasons. On the one hand, they provide guidance on the future performance of companies and share prices, which is useful for hedge funds, pension funds. But on the other hand, it can be quite dangerous for the CEOs running these companies. Because you have to ask yourself, what does a 23-year-old research analyst know more than the actual CEO running the company? And since these equity research analysts are placing price targets and specific targets which the CEOs running these companies have to meet, if they were to miss some of these targets, then one of the quickest ways to get the share price back up is to reduce costs. So, slash 500 jobs. Now, this is the kind of stuff which is not discussed at schools, at universities, because these are the kind of things which you see once you actually start working in the industry. Now, is it right? Is it wrong? Well, that's not for me to judge. It's just something which I've seen, but no one really seems to talk about. Another thing is, some research analyst actually transfers to investment banking and vice versa. And that's because the skill set is pretty much the same. As a mergers and acquisitions analyst, a lot of my financial modeling is pretty much similar to what someone in equity research would do in terms of intrinsic valuation and relative valuation. So DCF models, comparable models, present transaction models, we would both do the exact same type of financial modeling. Although an equity research analyst would do it a bit more detailed than someone working in mergers and acquisition. But because the skill set is pretty much the same, you can pretty much transfer divisions. So now let's look at a different area of investment bank. Let's look at the asset management area or wealth management area. The wealth management department really varies by banks. Some banks have a small department. Other banks, one of the largest areas is wealth management. Credit Suisse is famous for having one of the largest wealth management divisions within the whole investment banking industry. Now, wealth management simply manages money on behalf of clients. And these clients could be corporations, companies, governments, individuals, even other wealth management firms. Now, the final area which we're going to look at is private banking. And what private banking is, this is a standalone area only at large investment banks like Morgan Stanley, JP Morgan, and the likes. And in private banking, this is an area for very wealthy individuals. And this is where the bank is going to manage their money, their taxes, their estate, setting up trust funds for their kids. Now, this area is sometimes grouped under wealth management, but again, at larger investment banks, it has its own standalone area. But it's pretty much for very wealthy individuals to manage their money. And individuals that work within private banking, They have a lot of client entertainment to do. They have a lot of meeting client demands, and it's a very client face-to-face driven area. So that's pretty much it in terms of the major areas that you can find at an investment bank. Now, 100 years ago, what an investment bank was back then isn't what it is right now, and it's really important for you to know this. I know a lot of people that go into investment banking with the expectation that everything which takes place at an investment bank is investment banking, i.e. IBD, but that's just not the case. And there's a couple reasons for that, because one, the name has kept constant even though the business model has changed. Another reason is there are individuals that work in S&T or even in sales in S&T, but whenever they seem to introduce themselves socially, or whenever they make videos or write blogs or write books, they're always introducing themselves as an investment banker, when it's not accurate. They work at an investment bank, but they are not in investment banking. So the advice they're giving, the insight they're providing, is completely wrong for investment banking, because the skill sets are different. What we look for in investment banking is different from what those that work in sales and trading look for. And if you confuse the two, your interviews is going to be pretty embarrassing. And if you want to know exactly the kind of questions and answers we expect from word to word in specifically investment banking, so mergers and acquisitions, capital markets, then take a look at our interview guide, where we provide specific questions and word-for-word answers for the questions which you're going to get. So when you're reading blogs, books, and watching videos, be careful about what information you're receiving, and make sure that it's for the specific area you're interested in. Now, before I leave, let me just leave you some final commentary. As you might have already known, not all investment banks are the same size, so they don't all provide the same service. Some investment banks are pretty small, so they only specialize within one area of investment banking, like mergers and acquisition. Now, some investment banks are boutique banks, so they further specialize within mergers and acquisition, so they might only cover TMT, M&A related deals, so the only transactions which they're involved in are those that are within technology, media and telecom related M&A transactions. And if you want to know more about investment banking, especially M&A, then check out my 1 week in the life of an investment banking analyst, as well as an introduction to investment banking, where I break down everything which goes on in investment banking specifically. Okay, I hope you've enjoyed this video. Please subscribe and like, as well as leave me a comment on what you would like me to cover next. Again, you can pretty much ask me anything about investment banking on the recruitment stages, the kind of questions we ask, what we expect from you. Until then, check out our investment banking course as well as the investment banking interview guide to help you prepare for your interviews. Till then.